Moody's is predicting that U.S. home prices will climb through 2035 with steady, sustainable growth. I'll break down exactly what that means in the greater Philadelphia area next. If you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team, you can do that with the link in the comments to navigate these potential gains in home equity and home prices. Moody's is predicting that U.S. home prices are going to keep climbing over the next 10 years, which is pretty incredible, with steady and sustainable gains after some slower growth over the past 24 months. And for the Philadelphia metro area, the forecast is a lot stronger than the national average. So home price growth over the next 10 years is predicted to be 29%. And I've got this chart here that Nick's going to show everyone that shows exactly what Moody's is predicting in our marketplace. To give you some perspective, the next 5 years, they're predicting a 12.6% growth in pricing, and 2025 growth is projected to end at 3.7%, with another 1.1% in price growth in 2026. So we're going to expect modest growth in the short term and then accelerate over the long term. And what that acceleration is going to do is going to outpace inflation and provide major equity gains. If you look at this chart here, we're going to put up now, this is the 10-year forecast based on the U.S. home prices and the Case-Shiller Home Price Index, and it shows that we're going to see kind of nice, steady growth in the U.S., but again, Philadelphia is going to be outpacing that, and that's why I wanted to share those statistics. We've got both charts broken down here for you so you can see for yourselves from Moody Analytics. So here's what all this means for sellers. One is that long-term equity is going to remain strong. Even if price growth cools a little bit next year, according to these Moody's predictions, the long-term projection is very bullish. A 29% rise by 2035. I mean, that's an incredible number. And that means that homes getting listed today or even bought today, if you're a buyer, they could see hundreds of thousands of dollars in value over the next decade. Short-term sellers might want to think about acting strategically. We're going to see moderate price appreciation ending this year and into next year, but it's not explosive growth, which is fine. That's normal. That's what you want to see. That favors well-priced, well-marketed listings, and buyers are going to be more selective in these balanced conditions. So you want to bring the right price to the market, make sure there's a really good marketing plan in place, and bringing a product that's going to get the right emotional reaction from buyers at the door. And if you're one of those people that's not going to sell until there's another big jump in prices, you might be waiting several years. And demand is still healthy right now, and that's thanks to strong job markets in the local area here in Philadelphia and limited new inventory in the suburban counties. So you might be waiting a long time if you're waiting for prices to really go through the roof, which means the right time to sell is when you have a new place you're going to move to, and it's right for you and your situation. And there's a local advantage here that we are much more affordable in the greater Philadelphia area compared to other markets that are very close to us, New York, D.C., and Boston specifically, where some people are priced out a little bit. And there has been a migration trend from these markets down to the greater Philadelphia area. So a lot of positive news here for sellers. Now, for buyers, you might be waiting for the one. My main takeaway here is that if you're waiting, you might be waiting for a while, and the conditions may not improve and likely won't based on these predictions. You know, if you're looking at a 12 to 13 increase in pricing by 2030, that means some homes could tens of thousands of dollars more in the next 5 years. So it could cost you a lot of money by waiting, and even modest appreciation will compound as rates may ease. You know, that's the predictions that we're seeing here. Competition's likely to heat up again when that happens. The next 18 months look to be an identified breather room for a lot of buyers, according to this Moody's forecast, where they suggest a more stable market, not the double-digit surges that we saw in 2021 and 2022. And that gives buyers a short-term window to maybe secure concessions, negotiate, buy with less competition, which are things a lot of buyers have told us they're waiting for. Equity growth outlook looks great. So your long-term investment, 29% over the next 10 years is incredible. So that's a great reason to maybe be looking for something now. And we're seeing that, we're a lot of the suburbs in the greater Philadelphia area, places like Westchester, Media, Radnor, Lower Merion, Downingtown, Newtown Square, well, they may outperform some of the other markets because of the school systems, the infrastructure, and the limited land for new builds. So buyers focusing on, really the greater Philadelphia area and the collar counties, you're going to do pretty well here if you buy something now. So that's what the takeaways are here, right? Sellers, you want to be realistic with the market and see where list to sales price ratios are coming in. I mean, there is a steady market happening right now in buyers. I'd lock in now while appreciation's modest before you see another run up that's predicted here by Moody's. And if you got questions, you're confused, there's a lot of information here. Click on the link in the comments and we will get you up to speed.